Hey everyone, welcome back to my channel. It's Nasdaq with Archer, and in today's video, we're going to be talking about a new hot SPAC merger with an electric aviation company, Archer Aviation. And before we get into that, this is just a friendly reminder that I am not a financial advisor and I highly suggest you doing your own research before taking part in any investment scheme. Let's get started. I'm going to share my screen with you guys. So on Google Finance, our SPAC merger is with Atlas Crest Investment Corp with Archer Aviation, as I said before. And they released this news on February 10th, and on February 10th, it was trading at $11.17 at 4 o'clock p.m. And at 9:30 a.m., it shot up to $15.43 because of the news. Now it's slowly cooling off at a price of $13.58. And let's move on to some news. As we scroll to the top of the page, we can see that the deal includes $600 million common stock PIPE with participation from leading investors including United Airlines, Stellantis, and the venture arm of Exor, Baron Capital Group, the Federated Hermes Kaufman Funds, Mubadala Capital, Putnam Investments, and Access Industries, the statement said. Additionally, Ken Moelis and affiliates, along with Mark Lohr, are investing $30 million in the PIPE. California-based Archer is chasing the electric air mobility market that Morgan Stanley says could be valued at $1.5 trillion by 2040. Archer is developing electric vertical takeoff and landing aircraft to serve as an environmentally sustainable air taxi. The top range of the aircraft is 60 miles at a speed of 150 miles per hour, according to Archer's website. As we can see, their aircraft is actually pretty short-ranged, and it is supposed to be environmentally friendly. Also, they have a deal with United, which we'll touch on that later in the video, and actually a few minutes later. And also, key points to note on this deal, they have a $3.8 billion deal that is expected to close by quarter two, and they have $1 billion, as I said before, with United. Let's look at some key points on this deal. 13 things to know about this deal. We should note that Atlas Crest Investment first came public in October 2020. General information. At the time, it raised $500 million by offering 50 million units at $10 each. Investors should note that Ken Moelis, the founder of Moelis & Company, is currently steering the SPAC. Today, ACIC stock is rallying on the news of the blank check company would acquire Archer. Archer is an electric aviation startup working to make an electric vertical takeoff and landing eVTOL aircraft. The company is based in Palo Alto, California, and launched in May 2020. It counts United Airlines and Mark Lohr, the former CEO of Walmart e-commerce, as its backers. It believes the sort of aircraft will fix traffic problems in cities and make transportation more sustainable. The company is targeting affordable, safe, and quiet vehicles to address travel problems. The goal for this is for its eVTOL to be able to fly for 60 miles again at 150 miles per hour. Pretty short range again. Perhaps most importantly, Morgan Stanley estimates that this electric aircraft market would be worth $1.5 trillion by 2040. Investors should note that the Archer SPAC merger is a deal worth $3.8 billion, and merging with Atlas Crest will result in net proceeds about $1.1 billion. Let's look at the aircraft itself. So as we scroll to the top of the page, we're going to notice a well-developed website saying Archer, the first ever commercially viable electric VTOL aircraft. And as we scroll down, we can see the founders, and their performance estimates accounts for realistic battery pack integration, inaccessible energy at low state of charge, emergency reserves, and capacity fade at the end of life of the battery. what they basically want to say is they want a low-cost alternative and make it available to the public. And on their website also they say our goal is to make our service affordable for the masses. This means driving operating costs down to the price of ride sharing and over time to the cost of car ownership. Here are a few of important cost drivers: maintenance costs, energy costs, and higher utilization. Noise. Our goal is to drive flyover noise at or below equivalent sound levels of residential neighborhoods. Within cities, helicopters are too noisy. Helicopter noise is driven by loud turbine engines and high rotor tip speed. The tip of a helicopter rotor is traveling close to the speed of sound, creating a lot of noise. Our aircraft have electric motors turning propellers with low tip speeds, resulting in considerably less noise. This is on their website. And they also plan to make their goal is to make their electric aircraft just as safe as commercial airliners. So this sounds pretty good to me. And we will go back to the United deal. Facts on the United deal. So United's regional partner Mesa Airlines is also part of the deal, holding rights to 20% of United's purchases, said security documents filed on 10 February by Archer partner Atlas Crest Investment. United states that once the aircraft are in operation and have met its operating and business requirements, it will acquire the aircraft. United's orders have an aggregate purchase of $1 billion, and the airline has taken options for another $500 million in orders, say security filings. The aircraft are expected to give customers a quick, economical, and low-carbon way to get to the United Hub's airports and commute in dense urban environments within the next 5 years. Archer intends to unveil its aircraft in 2021, begin production in 2023, and start passenger flights in 2024, United adds. Initial routes for Archer's still unnamed eVTOL aircraft could include those from Los Angeles, a United hub, Dallas-Fort Worth, and Orlando, Archer said. The startup calls United a key equity holder and strategic partner and says the 200 aircraft commitment represents the largest eVTOL purchase in history. United also signed a collaboration agreement with Archer. And as we scroll down to this page, United will contribute its expertise in airspace management to assist Archer with the development of battery-powered short-haul aircraft, the airline says. And as we look at the roadmap that the Archer has provided for us, they also want to make this eco-friendly, as they say on their website. Today, half of the world lives in cities, and the United Nations projects that by 2050, close up to 70% of the world will live in cities. The timescale around scaling ground infrastructure, roads, and bridges are too long and costly, and given their 2D nature, can't support a 3D city. If you can build an electric aircraft that has high performance, low cost, high safety, and low noise, you have the ability to unlock a new dimension of travel, one that lives in the third dimension and has almost infinite scaling potential. We believe this is the start of a new golden age of aviation that we haven't seen in 100 years. And restating, because this is important, Morgan Stanley estimates that this new electric aircraft market will be $1.5 trillion by 2040. In conclusion, this stock is good. It's bullish. I'm bullish on it. In my opinion, it's a little speculative, but around the price of $13, it's low risk, it's high growth, and in my opinion, good. So that's all for this video. Thank you guys for watching this video. I hope you enjoyed this video, and if you did, please drop a like, a comment, and a subscribe down there for more videos like this. See you in the next video.